Welcome traders to this weekly Forex recap brought to you by Admiral Markets. Today's focus, Fibonacci levels and trend lines on the euro dollar, pound USD, dollar yen, and Aussie. First of all though, be aware that this video is shown to a global audience, yet may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out more about that. Also, please be aware that trading for exchange and global financial markets in general is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes only, and by continuing watching this video, you agree with this disclaimer, plus you're aware of the risk involved when trading. I want to start with the pound USD 4-hour chart because the pound has made a strong retracement to the upside. However, the price is still, in my opinion, in a downtrend. So obviously this could be an opportunity for price to turn back in this downtrend and continue towards lower levels. So price has, depending on various fib levels, in this case, when taking the top to bottom, from the very top, we are reaching the 50 fib at 142.50. Price stopped there, hit that psychological quarter level, and seems to be moving down from there. So that could have been a resistance spot last week, perhaps, to trade. That's behind us, though, of course. So at the moment, the next step could be the break of this channel to the upside. You can see the bullish angled channel there. Well, if that breaks, that could be another signal, of course, that price is turning back and going into the downtrend. To see, because we do have a couple of bullish candles running up here, I would like to probably see a break of Friday's low. Today, see an engulfing twin, perhaps like that. See a bit of retracement tomorrow of today's engulfing twin, about 38.2 fib, 50 fib, when placing a fib from on that bearish engulfing twin, basically. And look for potential downside like that. You can see price retesting not only the 50 fib, but the trend line, retesting this zone and these bottoms right in here. So there's plenty of reasons to consider, of course, a downside continuation. Now the weekly does look a bit different because we had a strong bullish candle, and that shows maybe that the upside is not to be underestimated. From that point of view, if I do take a short, I don't think it would hurt to aim for a target that is roughly at last week's low, just in case that level does not break. I think that's a solid kind of way to approach it, because aiming beyond that bottom might be a tough thing to aim for, considering the upside momentum that we do have here at the moment. So once again, a break, pullback, continue down to that level, I think could be a sweet downside trade, within, of course, the nice downtrend that we've seen so far on this pound USD. All right, before continuing with the other pairs, wanted to let you know of the webinars we have this week. Monday, as always, Netta takes a look at the weekly FX recap with his setups of the week. All levels and stop losses and take profits will be known. Tuesday, I take a look at live Forex market in the morning, same like Wednesday, but then the focus is on strategy. Tuesday evening and Thursday evening, we have live education, pivot points, and leverage, plus feedback cycle on these two webinars. And mind you, the typical Wednesday webinar with Netta is now on Tuesday evening, same time. On the list is euro dollar, and we do see a pretty hefty upside here. Finally, price bouncing off that 78.6 fib that I was expecting the price could indeed use. We already saw respects for these fibs, most of these fibs actually, and the 78.6 fib finally being a bit of a bigger bounce, right? And we see a rally of about more than 200 pips. Now price is falling again. So is this a fall for downtrend or still one more upside continuation? And from my perspective, I'm expecting upside. If I look at this move up, I see 5 waves, which to me probably seems like a wave A. I do think that this is a correction for wave B for the moment, and then I would expect the wave C to occur to the upside. An ABC bullish zigzag is what I'm anticipating at this moment. Obviously, if this bottom breaks, then we're not going to get that ABC zigzag. My analysis is invalid. If price does stop at, for instance, the 38.2 fib, the 50 or 61.8, which probably seem the most likely bouncing spots at the moment, it could bounce it deeper, it could bounce all the way here, but for the moment I do think that these 3 fibs here seem more logical, considering the ABC zigzag potential. And so if price does turn here, there's also a trend line that broke, could be now support, and I would expect price to go up to the -272 target at 111, or the minus 61.8 target, 111.75, maybe even up to 100, minus 100 target at 112.50-ish. So that's what I'm expecting. Now that's the hourly chart. Basically, 4-hour chart just shows the same. The price made a very, very, very deep retracement here, but ultimately still finding the support, and I would expect this to happen to retest basically this resistance is right in here. That's of course price where price could still struggle when it does get there. From a daily perspective, or weekly perspective I should say perhaps, price is just staying in this consolidation zone. So even an upside here to 111.50, as you can see, the minus 272 target, basically, or let me take this off so we can clean it up a bit. Basically any rally here still well within the consolidation zone, and of course we had a good impulse before that. So eventually I do expect some weakness here, and at one point I think we can see that downtrend continue. Not sure if it will be this month necessarily. You can see kind of a channel like this already maybe occurring, so that channel could last still a while, but eventually I think that channel will break and we will get a downside continuation that will go through this double bottom as well. Just not sure if it will be this week, as when I look at the 4-hour chart and the hourly, it seems like an ABC zigzag is more likely. Alright, dollar yen. Well, I see a triangle, and price is basically building that triangle after a strong bearish momentum. So obviously, if it breaks support, there could be a breakout potential. For instance, a break pullback continuation could be an interesting downside trade in my opinion. And there are a lot of things, price is below a lot of resistance. So if it breaks that support, I think it's just a good downside continuation, or there's a good chance for that. Now if it gets up to resistance, let's say it breaks this triangle and goes up, then I don't think that's so interesting because it's slamming into various resistance levels that could turn price back down. So I'm not interested in an upside break because what I see is heavy levels of resistance just above it, which easily turn price back down. So yeah, I'm pretty bearish, as you can see, either upon the triangle break or if price goes higher and hits that higher resistance. Now if it breaks above, for whatever reason, starts to break above 117.50, well then my analysis is out of the window again, not valid, because then price is definitely retracing deeper than I'm expecting. I'm going to reanalyze this one and see what's going on. I'm going to be on the sidelines, being a bit cautious with that one. All right, last but not least, the AUDUSD had a tremendous bullish week last week, pushing through the triangle actually to the upside, not to the downside. The downside break would have been interesting in my opinion because we did have momentum down. We had a large downtrend for very long on the Aussie, and obviously if it breaks support, we could have one more push, one more continuation. We didn't. Price challenged the resistance and moved away from it a bit, but not enough, and just kept pushing, and then we got the break to the upside. You can see that probably a bit better on the daily chart, where we had a triangle like that, price stuck between those two zones, and then boom, we got the break to the upside. So from my perspective, very impulsive break as well. So from my perspective, I think looking at this 4-hour chart, if we get some kind of bull flag like this, and if I put a fib from here to here, if we get a retracement anywhere down to the 23.6 or the 38.2 fib at 73, 73.50, I think that those are good potentials for continuation up to the minus 61.8 target and minus 272 target here at 75. Now one of those two targets, minus 61.8, is actually a fib from here to here, and that's the target. As you can see, we hit the 61.8 fib here. So the main target is the 75 level for the moment. Now it could always pause there and show a flag and still continue higher, right, to the next target at 76.50. It's possible, but most likely there will be a pause, there will be a respect for 75, or maybe even a stronger retracement or reversal. So something to be cautious of. So when price makes a retracement like that, I think the main target is 75 for the moment. And then we'll have to see how price responds to that level. All right, thank you so much for joining. I hope to see you in the upcoming webinars. Make sure to take a look at admiralmarkets.com or the social media to see all of the content that's been reproduced, all of the analysis, fundamental, technical, wave analysis, each and every single trading day. See y'all soon, and wish you good trading. Cheers.